Good morning, everybody. Welcome to another Market Report brought to you by Mike Bjork. Today is Tuesday, and it's May 10th. Another quiet day today, actually, on the markets. As you'll see later on, the stock market is actually up. But the only thing really to kind of note today is the NFIB small business. This is confidence level of the small businesses, which is important primarily because they make up the bulk of the employment jobs here in the U.S. So the last reporting back in March was 92.6, and it did bump up to 93.6. We did see some jobs challengers increase in quite a bit, which means job openings had improved in the month as well. So that's a good sign that more jobs are being created. So this could help out our jobs numbers, which kind of dipped a little bit. So, but the stock market's up. The Dow is actually up over about 160 so far this morning, and a lot of it has to do with there's a little bit of a rise in oil prices. They're kind of, because it's so quiet, that they're kind of taking their cue again from oil prices today. It was down to about 43.96 and it bumped up to about 44.22. So it bumped up a lot, not like a couple dollars or anything, but a matter of about, what do we say, about 30 cents there. And which, if you look at millions, pile that over millions of barrels a day, it translates to a lot of money. But a lot of that was due to some fires subsiding a little bit in Alberta, which had the fires, and there were some disruptions going on in Nigeria as well, which was concerning about the oil supply out there, even though there's a bit of a glut of oil supply, which is the reason why oil prices are so low compared to where they were about a year or so ago. Here's the bond market. We're about, as a result, even though the stock market's up about 160 some points right now, we're only down about 3 basis points from where we left off yesterday. So that basically translates to the same rates what we had yesterday. There's no change. We're kind of in a sideways pattern here. We'll probably be riding in this sideways pattern for a little bit. Again, later this week we'll have the retail sales and CPI. That might be the only thing that might kind of move things, unless we have some geopolitical concerns that pop up. But this week might be kind of a quiet week, and I would foresee us kind of going more of a sideways pattern this week, which means basically rates will probably be remaining unchanged this week. But as you can also see, is we have the 10-day moving average kind of creeping up a little bit here as well. So that's something to kind of keep an eye on. We got right now the 25-day moving average just below that. So at some point, while this rises, we have this floor here, we're going to be kind of crunched, and we might get pushed either higher or lower. And most likely, because we're in kind of the high area here, we haven't broke above this level in a year and a half, that most likely we would probably fall below that to be most. So I would caution more that we would have more room to fall than we would have go upwards. All right, folks, you guys have a great day. I hope you guys enjoy the rest of your day here, and we'll see you guys tomorrow. Thanks for watching. Bye-bye.